So what the efficiency factor does, it measures how efficiently your fee earners' paid hours turn into professional fees billed. Now, I'm a chartered accountant. I work on the numbers. I focus in on what those numbers are telling me so that I can effectively create the story for what's happened in the past in a firm so that we can then develop the strategy of what needs to happen to improve that position. And this issue in the very foundation of strategic planning for law firms is the key issue that drives challenges in firms around their profitability, and that is they're generally making nowhere near the amount of revenue that they should be making for the number of hours that they're paying for their fee earners. And what I mean by fee earner paid hours is they're the hours that they're paying regardless of whether or not a fee earner is there or not. And fee earners include the principals of the firm, the solicitors, and then the legal support people, whether they're paralegals or legal secretaries, all of the people that are employed purely to work on files in some way, shape or form. It doesn't include your receptionist or your practice manager or your IT people or your finance department. And this by its very nature is the thing that has the biggest impact on profitability. If you can get those ratios right between how many hours you're paying people to work or not to work, when they're on holidays as well, and you can turn that into professional fees billed by improving that ratio, that's where your profitability is, because your paid hours are generally a set amount. You need to generate a certain level of professional fees to be able to make the appropriate profit. So let's dig into that a little bit further. So what the efficiency factor is, it's the relationship between the revenue you would make if every fee earner meets their basic expectations. So this is called capacity. So one of the very first things that you need to do in understanding your efficiency factor is understand what your capacity is. And your capacity is as defined there. If everybody met their 5 hours, 5.5 hours, 6 hours at their charge rates, then this is, and build it all, then this is the amount of revenue that we should be able to make. And that's then compared to the actual amount of revenue you make, which is your professional fees billed. So if you're understanding the gap, if you like, between your capacity and what you're actually billing, then you can start thinking about what the actions are and the strategies that you need to implement to close that gap. The closer you can get your professional fees billed to your capacity, the more profitability that you're going to make. So I know it sounds basic and yep, it's like fundamentally no kidding, Matt, but it is a profound understanding that you need to have of these two numbers and the relationships and what drives them. Because once you get that, and once you hone in on what those key activities are that you've got to change one at a time, it is not that difficult to get improvements in your growth of professional fees billed. So in other words, your efficiency factor, it really looks at how efficiently you're generating the right revenue from the direct labour you're paying for. And that's the whole purpose here. How efficiently are we generating our revenue from those costs? If you'd like to go back into some other webinars that I've done over just this year and previous years, I deep dive into that a lot more, really looking at those the makeup of, say, how profit's calculated and the impact of the relationship between the direct labour cost and your revenue. I'm not going to go into that in as much detail today, but if you want to go and dig into that a bit more, just hop on our website, 𝗚𝗿cie𝗂𝗿𝗄, and there's a whole pile of different webinars there that you can go in and get a bit more information in. So efficiency factor. Let's expand that a little bit further. The formula is pretty straightforward. The formula is basically your professional fees billed divided by your capacity fees billed, so what that capacity could be, times 100 to give a percentage. So what you're actually billing divided by your capacity, that gives you a percentage. But let me show you that with some numbers here. Okay, so let's start with, this is just for a single solicitor, say, so you get the understanding of what their capacity is. Capacity is always based on all the number of hours that you pay someone to work on, and then comparing that to work, and then comparing that to the number of hours that they're actually at work. So let's say you've got 38 hours that you pay people in a week. The number of paid hours in a year then are going to be for 52 weeks. So there's 1,976 paid hours. You take out 4 weeks annual leave, take out 2 weeks public holidays, unless you're in Melbourne, you seem to have about 15 of those, and take out personal leave, 2 weeks, which, mind you, just go on that in Victoria, really good weekend there with the Lions getting up. I'm from Brisbane, go the Lions. So we've got 44 available weeks, which gives us 1,672 available hours in a year. So these available hours are the hours that people are at work. They're the hours that you need to be focusing on what people are doing so that you're generating the maximum amount of revenue that can be generated from those hours that they're actually there. But mind you, you're still paying them for 1,976 hours. So if we're going to look at what someone's capacity is, let's say your target is that they're at 5.5 hours in a day, so 5.5 of what I call charged hours, billable hours. And so that's 1,210 hours out of those 1,672 hours that you're expecting them to bill, or to at least put into their timesheets. And let's say their charge rate is $420 an hour. Well, so that means someone's capacity, their target revenue, is $508,200. So with it being at that level, you've really, that's your budget effectively. That's what you're saying. We're employing you, we're paying you a salary, and for that salary, we're expecting you to generate at least 5.5 hours of revenue every day at $420 an hour. What I see in a lot of firms is that they then actually set a budget at a lower value, which just doesn't make sense to me. If you're employing somebody and the expectation is to do this, then that should be their baseline budget. So I always encourage firms to set their baseline budgets equal to the number of hours they're expecting for them to add into WIP and on a daily basis. The thing that often gets in the road, which we'll talk about a little bit in a bit more detail later on, is that it's the systems and processes that are in the business that are driving the wrong outcomes, which makes it difficult for people to actually hit their 5 or 5.5 hours. They might be generating 3 or 3.5. It's not that they're not busy. It's not that they're doing work, not doing the work. It's just that their systems aren't ensuring that that is hitting WIP. So let's extend this a little bit further. Let's say that they're only actually doing 4 hours a day. And so instead of having $508,200 going into WIP, they've only got $369,600 into WIP. What they're also doing is they're writing off. There's write-offs of 10% of that time. So the amount that's of actual revenue in this case is only $332,640 billed. So when we compare that and have a look at the numbers that are being produced as a result of this particular person, we had a charge rate based on capacity here of $420. The actual billable rate was only 378, but their average rate here is only 168. Now, average rate is calculated as their actual revenue divided by their total number of paid hours. So for every hour that you're paying this particular person to work, and you pay them whether they're on holidays or they're sick or it's a public holiday, you're only generating $168 per hour for that person. But this is a different way of looking at what that number means. And what it is the efficiency factor. It's saying that that efficiency factor is only running at 65% of the revenue that should be generated by that person as their baseline expectations. So if you think about that efficiency factor as a firm as a whole and get a really clear picture for all of your fee earners, whether they have billable hours or not targets, such as in some firms, legal support people don't have a billable hour, but their paid hours influence that average rate. If you look at the total number of dollars of revenue billed compared to the total number of capacity revenue, amount, then you get the efficiency factor. And when you look at that efficiency factor, you go, oh my goodness, 65% on baseline expectations. Well, that's pretty poor. Let's just take that another step. Let's say you pay this person $125,000. So that means out of that particular person, you're only generating $207,640 worth of gross profit, being their revenue minus direct labour hours. I'm just going to extend this a little bit further without putting some numbers in here. If this person also had a legal support person, let's say it was only even a 0.5 of a full-time equivalent, and they're paid $70,000 a year, and they're not generating any revenue for that, then the real gross profit, when you apply 50% of that $70,000 worth of labour cost, is another $37,500, which brings this up to $172,500 and drops your gross profit down to $160. So when you look at the actual amount of revenue that you're generating after labour to generate that revenue, it really is a big impact on your GP. Now for that reason, it's critical that we understand our efficiency factor so that we know what that gap is, so that we can then start drilling further into it to say, well, what is it that we've got to do? So what we're going to do now is we're going to run a quick poll. And my expectation is that you won't have ever really sat down and assessed this yourselves. And that's okay. What I'd like you to do is I'd like you, before you answer it, just stop for a second and think what it might be. Think of what the revenue is that you generate and think about what that capacity might be. If you work out your capacity each year, then that'll help you. But if you don't, think about it from the point of view of how many billable hours actually are landing into what gets billed. How much of it might be getting written off? But don't overthink it. I'm just keen to get a bit of a feel for what you think at the moment your efficiency factor might be. So simply, what is my revenue that we actually bill against our divided by our capacity? What would that be as a percentage? So, Christina, if you could just launch that poll, please. That's firing off now.
So for those that are on Microsoft Teams, you should receive a notification just in the middle of your screen. For those that are watching through a web browser, you should be able to see that in your meeting chat.
So maybe just another 10, 15 seconds while you think about it. It'd be really interesting to see the perception.
Awesome. Results are in, Matt.
Great. What have we got there?
So 0% at 100, the first one, 11% at the second option, 28%, sorry, at the third option, and 61% at the fourth option.
Excellent. Thank you very much for that. And look, that's pretty normal. My expectation, though, if you really drill into it, would be that the 90 to 100% is probably going to be a little bit lower than the 11%, because what I see is that a lot of firms really don't factor into all of the potential opportunities for generating revenue across all of their fee earners. But it doesn't surprise me that we got 68% at 75% or less. And in fact, I would probably suggest that there is a good chunk of the people in the 75 to 90% in reality will be down below 75%. So thanks for that. Be worthwhile you after your the session today, go back and calculate what that capacity is, and then just have a look at what it is compared to your actual billing for the last 12 months. See what that efficiency factor is. So here's some insight around the efficiency factor. If you're at 100% or plus, you've got a high level of efficiency, but you'll be capped out. There's basically no more revenue you can generate out of the people. You need more people. You can probably generate a little bit more revenue by putting your rates up, for example, but you're basically you're getting what the maximum amount that you should be. So that's pretty good. Usually unsustainable though. If you're at the 90 to 100%, you'll have a little bit of spare capacity for revenue growth, but your business is going to be relatively efficient. So where you'll get additional capacity from is from looking at improving your production KPIs. And I'll run through those production KPIs shortly, particularly around productivity and write-offs, but it's likely to only be marginal because you're already achieving that. If you're in the 90 to 100%, there's not much more work that people can be doing in your firm to get growth. 75 to 90% efficiency factor will give you a reasonable level of spare capacity. So you've got plenty of room there. So if you think about that, if you're at 75% at the bottom end of that range, then and you got $2 million worth of capacity, that means you're running at $1.5 million worth of billable revenue. There's $500,000 gap there. So you've got a very high likelihood of unlocking additional capacity by getting some improvement in your key production KPIs, which also are your key profit KPIs. So really focusing in on how you get those positive movements. But there might also be some excess labour costs that still needs to be cut. So getting really clear on what's surplus labour and what isn't is also critical. But that's usually the second thing you do. Your first thing really is to say, well, what are our processes that we've implemented in the business that are stopping us or inhibiting us achieving a closer to capacity outcome? If you're less than 75%, you've got significant levels of spare capacity. And you're really going to have a look at your labour cost, because at those sort of levels of capacity, your margin's going to be very, there's going to be pressure on your gross profit margins. And you've also, your upside is still always going to be from getting better outcomes from your production KPIs. Now, interestingly enough, when I look at these firms that have got very low efficiency factors, it's often the case where the firm has got very high partner productivity and low other fee earner productivity. So the partners are propping up the billings in the firm, and they're not generating the revenue that should be generating out of all the other labour costs. So in firms like that, you really need to focus on what are those key strategies and changes to our structure or our systems in a contextual way that we need to make to allow the system to produce better productivity from those lower fee earner numbers. So that's how you then sort of look at efficiency. So depending on where you're at, it's going to guide you around what sort of strategy you need to be thinking about for improvement in profitability. So here's your core profit KPIs. It's average rate. Average rate is the number one profit KPI that you need to be measuring. I've got a whole bunch of webinars and information on our website on that if you want to go back and have a look at them. But the average rate is the key number you need to be measuring that directly drives your efficiency factor. And what your average rate is your professional fees billed divided by your paid hours. So if we go right back to that calculator that I had on the screen before, maybe I'll just pull it up here again. Where to go? Your average rate here, $168, is your revenue that's billed divided by your paid hours, 1976. That number there is provides the direct relationship between how many hours you're paying people to work for you and the revenue that's being generated. Remembering paid hours don't include your practice manager, your finance team, your receptionist, your IT people. It's only people that you're employing for the purpose of generating revenue. So that's your average rate. And how you increase your average rate is by increasing fees billed, by reducing paid hours, or doing a mixture of both. So going back to the table that I had up on the previous screen, where we're looking at what is it that you need to be doing, depending on where your efficiency factor is going to challenge you then around what areas you need to be focusing in on in those strategies to drive your average rate. Again, you might look at that and go increase average rate by increasing fees billed, reducing paid hours, or a mixture of both. Nothing terribly amazing there. It's pretty basic. Get more revenue, pay lesser expenses levels, and we'll do a mixture of both. You make more money. But the key is what you've got to do that. And it's not just focusing on the outcome. It's working on what those specific activities are that are happening in the business that we need to fundamentally change so that we can get better predictable outcomes. So your professional fees formula, if we think about the driver here and assuming that reducing, we're not going to be focusing on reducing paid hours because most of your upside is always going to be in the processes that you've got that are stopping that capacity revenue being generated. So we're only going to focus here on the component of professional fees billed. So first of all, we need to understand what the formula is. And your formula is your charged hours times your charge rate times your recovery rate. So in a nutshell, how many hours of work are done, at what rate, and how much of that gets billed. So the KPIs that drive your average rate are these. It's your productivity percentage and it's your write-off percentage. Okay, so these two numbers are additional numbers that you need to be measuring and focusing in on to get an improvement in your productivity, in your efficiency factor. These two numbers by themselves drive your improvement in your average rate. The higher your average rate, the greater the revenue you're generating for every hour that you're paying, the greater profitability you're going to have. So productivity, what is it? It's the number of hours that fee earners are at work that get added to WIP on matters. So productivity is the relationship between how many hours I'm putting on my timesheet and how many of those and how many hours am I at work. So it's those available hours. So if your available hours in a day it's 38 hours in a week, which is 7.6 hours in a day, then at 5.5 hours, that's what your expected productivity is, which I think is about 72%, I think. So that's what you're expecting. And then if you measure what people are actually doing, you can say, okay, well, why? What is it that's happening that's causing this productivity to be low? And I know what you might say is, look, we're constantly bashing our head up against a brick wall saying, people, just put all your time down, put all your time down. And that by itself doesn't work. What you've got to do is you've got to change the fundamental context around what productivity is. And I'll come back to that shortly. The second thing is the write-off. And the write-off is the percentage of the dollar amount of WIP added on a matter that is never billed to clients. So it's your write-off. So if you got $10,000 you bill of time added on a matter into WIP, and you bill $9,000 of it, your write-off is $1,000, and it's a write-off percentage 10%. So that never lands in. That's work done that we never bill. So if you think about the flow of this, first strategy is to get the time into WIP. Second strategy is to get it out of WIP and into debtors. So by billing it, but not writing it off. Now, discretion is the biggest killer of profitability in firms. And in my experience with law firms, they leave there's way too much discretion that is that is with fee earners, so that they determine timing of billing, they determine how much time they're putting into WIP, they're determining whether or not they're re-engaging clients, they're determining what discretion around what work they'll do in this week. So because of all of that, you're going to have very loose discretionary behaviours, which is going to produce unpredictable results. So the key is to think about what all those behaviours are that are happening that are discretionary, and what we've got to do is tighten up and create better systems that make sure that we've got a greater chance of reducing discretion and increasing the predictability of our outcomes. So let's have a look at that in a bit more detail on here. So let me just show you what impact in this target column here can have by just improving a few things. So let's say we're going to take the view, we're going to increase our charge rate. What impact would that have if we increased our charge rate? Well, a $10 per hour increase in charge rate will only increase our capacity by $12,100 in a year, which is really only $12.10 an hour, or paid hours. I think, is that right? $10 an hour, sorry. Yep, for across those 1,210 hours. Let's say we also then changed up some of our systems and processes by educating our team around their expectations, educating them around how what their average rate really is, and the impact of not hitting their billable hours has on profitability. But more importantly, what is the real purpose of timesheet entry? And it's for measuring the amount of time done. It's not for determining what the amount of a fee is going to be. Ultimately, it will be used as a guide. But what you've got to do is change the systems and processes so that is the key bit that the fee earners understand. We just want you to, we just need to be able to measure using empirical data how much time is being spent. Doesn't mean we bill it. So let's say we could do that by just getting an extra half an hour per day. And that's not doing half an hour extra day of work. That's just recording another half hour of that work that is actually being done. Now, what that does, that increases the revenue the time entered into WIP by 56,100. So out of this increase of 508 to 520, we're now getting another 56 grand that's going into our WIP. And by getting that into WIP, we've then got a greater chance of billing it. Then if we improve our client engagement systems, our write-off and our billing processes, then we can get some more efficiencies around our write-offs. And if we could just get that down to, say, 5%, what that means is our actual revenue from that extra half an hour of time being recorded for that person is an extra $71,000. Now, the impact that has across the board, because you can see here, that just falls straight down to the bottom line in this gross profit. Our charge rate's only gone up by $10 an hour. Our charge rate for billable hours gone up to 409 from 378 because we're recovering more, writing off less of what's going in there. Now, our average rate has had a significant increase from 168 to 205. But check this out. Your efficiency factor for the same work is now gone from 65% to 78%. So that's 13 percentage points of additional revenue that you're generating just out of that same fee earner. Your labour cost has stayed the same. Your gross profit per hour has gone up, but the gross profit per paid hour is gone from 62% to 69%. Much better numbers. So by focusing on on the drivers of your efficiency factor allows you to really hone in on what those strategies are that we need to implement. And the worst thing you can do is try to do everything at once, because it just doesn't work. Okay, so let's keep moving along. What are you going to do? So it's nice in theory, all of this. Yeah, I've been banging, you think to yourself, I've been banging my head up against the wall. We've tried this, we've tried that, we've tried this. But what you've got to be doing is you've got to start with education. You've got to start with the context of why. You've got to start with building systems that drive the outcomes that you want. And those systems have got to be designed to change behaviours in the business. So let's look at what sort of things you can implement. And again, what I'm going to show you here, what I'm going to talk about, are those specific things that have been implemented in who knows how many firms across the last 15 years. We've been working with law firms in this regard that have impacted their profitability. So the first thing we've got to do is we've got to look at improving charged hours. How can we get more hours into WIP? So the first thing, the most fundamental part of it, is better client engagement and re-engagement. So here's our cost agreement, here's the appropriate either fixed fee quote, or here's the estimate. The more defined you can be around that estimate, the better. But more importantly is the re-engagement processes with clients. And that means you need to keep your clients up to speed on where they're at and where their matters at. So you'll have an estimate for a client that's going to be between $8,000 to $10,000 for a particular matter. But as you're working, so in the client's mind, they're going to think it's going to be $8,000. So what will happen when the fee earners are doing the work on that matter, they'll get to $9,000 and just keep working on it. The matter gets concluded and it's $12,000 on WIP, and they'll go, oh, what will we bill? Let's bill $9,800 because it's within the range. But the reality is that is that it was $12,000 worth of work. Now, you have in your cost agreements that if it goes out of scope or if it becomes different, estimates need to change, we'll engage you. But most systems in law firms don't have that as a standard function that needs to happen on a weekly basis. Of our matters, where are we up to in terms of what's been billed and WIP that hasn't yet been billed? If that's at or approaching or more than 80% of the estimate, you can put that estimate in your practice management system. If it's at 80% plus of that, the decision needs to be made by the person who's responsible for that file. Have I got enough fat left in this estimate to complete this engagement? If not, what extra time will I need? And I must contact the client and re-engage at that point. Update the estimate in the system, and then your client will just, they will pay it. It's a bigger issue, pricing, in solicitors' minds than it is to clients. You need to change the context of what is WIP. Okay, what is this timesheet entry business all about? In a fee earner's mind, they are making the decision, am I billing this at the point in time they're doing the timesheet entry? And that is not the context of what you want them to have. It is, we want them to put it in. The billing is a separate function. The billing occurs at the end and accumulates a whole pile of different contributions by different fee earners over time. So the context is changing in people's minds what WIP is, and WIP is just the opportunity for us to measure all of the work that's been done on this. It doesn't mean we're going to bill it. And there's a lot more to it than that. But if you can get that shift in the context where they're not thinking about, oh, I'm going to bill this, or I don't have to worry about whether or not I've got to justify this. You've still got to, there's still professional care, duty of care and responsibilities that they've got around doing work efficiently and so on. So assuming all of that, if you can change that mindset, it goes a long way to getting increases in your time added into WIP, which drives your productivity percentage up. And the higher that productivity percentage is, closer to their expectation productivity percentage, the more likely it is you're going to be able to increase your fees to clients. Now, this is an interesting one. It's what's not chargeable policy. It's amazing when I go into firms and we have a conversation with the team around what they put on their timesheets and what they don't. And the firm will say, no, it's policy that you put, putting a file note, writing a file note, or doing some research. It's policy, you put that on. And then you've got 5 different people say, well, I put this in, but I don't put that in. So it's hard when it's working out what is billable or what is chargeable. What do we put into it? Turn that around. Once you've got your team educated around what the purpose of WIP is, then have a what's not chargeable policy. In my view, there's only 3 things that aren't chargeable, that meaning that you don't put on your timesheet. Doing a cost agreement, raising a fee, or working on a fee, and fee inquiry. Everything else should go in. Now, whether it gets billed is a different story, and that's a big part of this, how you separate the billing processes and the WIP management processes in the business. Daily timesheets is critical. So if you've got you've got an expectation of 5.5 hours, 6 hours, make sure you've got systems in your business that ensure people do their timesheets daily and it's locked down and it's done. Not sitting there at the end of the week or end of the month doing their timesheets. They forget stuff. It's a habit. This is our expectation. Daily timesheets must be entered. And then engage your employees around their expectations. Engage them and educate them around the importance of understanding the purpose of WIP in the business. So this is only about charge out. This isn't about billing. The importance of understanding true WIP in the business. The importance of how it all accumulates based on the contributions by multiple people on a matter. So we need to be able to measure how much time has actually been spent on a matter. Then we can work out whether or not something is billable or not. However, if we're managing our WIP and we're re-engaging the clients on the way through, and the clients are saying, yep, great, continue on, I understand that, then it does make it easier. That re-engagement process by itself makes it easier for people to record time when they've got a separation in their mind that this isn't about a bill. Okay, so increasing charge rates. How do you do it? Well, just do it. Just increase them. Charge rates are absolutely irrelevant when it comes to clients. Clients are making a purchasing decision on a solution that you're providing to them, and that's not around how you calculate it. On that note, which I'll come to in a minute, billing, I have a particular view on whether or not people should be issuing itemised bills. I've got a webinar on that I ran a couple of months ago. I really encourage you to have a look at that webinar, because itemised bills, by their very nature, drive the wrong behaviours of fee earners in the business, particularly around productivity and write-offs, because they basically feel like they've always got to justify every cent. Now, from a client's point of view, they're not buying hours. You don't sell hours. You're selling a solution to them. You're solving something. You live in the world of a product of conflict. You're either resolving a conflict or preventing a conflict for a client. So it's very emotive type solution that you provide to clients. All they want to know is, what's the number? What's the total? What it's going to cost me? How you calculate that is just a methodology of how you work out what it is that you're going to be billing them. And that's just a function of hours times rate times recovery. So the reality is, most of the work that you do for clients comes from either existing clients that have been referred by existing clients, or clients have been referred from your networks. Usually there's a smaller percentage of revenue that's generated via direct marketing activity in firms, because most firms don't do it. Marketing, that is. So they're usually coming there. You have a high conversion rate, means that you'll have a meeting with them and then they'll sign up and do the work with you. So you've got a great sales conversion rate. And they're making that decision really not knowing what you're going to do, on the basis that you're just giving them an estimate and you're going to update them if it's going to be more. And look, they already think you're expensive. So stop disappointing them. Bill them for the work that's done. So increase your charge rates. It's a natural function. One is hours, productivity. Two is charge rates multiplied by your hours, gives you what goes into WIP. And then thirdly, how much do we recover of that? So we're going to reduce our write-offs. How do we do that? Again, better client engagement and re-engagement. Getting your prices up front and having those conversations about fees right at the front end. Do not discount. Do not undervalue what you do. The clients value what you do more than what you know, and have that conversation of what the value is to them. But re-engage them on the way through so that whenever the billing is happening, the client's always expecting that bill. Change billing to an admin function. Get it away from your fee earners. Get it away from your solicitors. They're awful at it. They're the ones that if they're going to be raising the bill, if they're doing the fee and preparing the fee, they're already making the decision right at the front end whether they're going to put their time down on that fee in their timesheet. So they're deciding then are they going to do it, because they're the ones that are preparing it. So if you take that away and all fees get prepared by your admin team and your finance team that says, here's the bill that we're sending out to the client, it's all in line with the estimates that have been provided or which you've re-engaged, you've got a completely different context or a completely different attitude or focus from the fee earners around time entry. You've maximised the opportunity to remove that discretion of whether they do a time entry, and then also whether it gets written off, because this is the policy. If it's in WIP, we bill it because we've re-engaged the client. Now, just on this point of itemised fees, get all these systems structured, working properly in your business, then the fees that get sent out to clients are not itemised fees. You do not have to send out itemised fees. You've just got to be able to provide an itemised fee if a client wants it. Clients do not care. In every firm that I've worked with that has implemented moving from itemised fees to just a single line fees for your on matter X for the period, whatever it is, the more with all of those clients, they have that fear. Those firms have that fear, but it never eventuates. They might get a couple of queries and they just send it out, that itemised bill. But clients do not care. It makes a whole pile of extra work that you've got to do. People drafting letters to clients about their fees, clients do not care. So focusing on your structured billing process, where if a fee isn't a deferred fee or a staged deferred matter paid at the end, or a staged matter where it's an event based, so everything else should be monthly, and every client should get a bill every month. They prefer it and they pay it. It drives your debtors down, so you get more cash in the bank. Take away the functionality of discretion by having fee earners having to prepare fees. All they've got to do is authorise them. In a lot of cases, gives every fee earner about a day of extra billable time every month, which can only increase your productivity. It turns billing into an administration function that is what it actually is. It is an administration function, best managed by accounting people who lack emotion when it comes to billing. So that's what you do, implement those things. And even if you can grab one or two of them and just and give them a crack, see how it works. You've got to really look at things in totality though, because each and every one of these activities do impact on the other. So just to recap, efficiency factor is the overarching guiding number of understanding how much revenue you're generating from your hours that you're paying your producers to produce that revenue. And if you then want to focus on how you close that gap, you've got to change up your systems and processes to get the behaviours you're wanting in the business. And sometimes that means people have to go, but you need to get a clear picture of where you're heading and then work out what those strategies are. In my view, the two things that make the biggest difference around producing the right outcomes from profit and cash flow perspectives that drive this is team member education. So educating your employees around how it all works and what their expectations are, and then feeding their information back to them around how they're going, because most people want to meet expectations. Secondly, getting your lawyers out of the billing process and turning it into an admin function. The more you do that, the greater control you have over your predictable profitability from revenue. So as always in these meetings, that's it for today. But the first, I always offer this for the first 5 to email me at matt@fwaca.com.au. We can book in a no obligation free 45-minute online meeting to discuss any of your profit and cash flow challenges that you're having in the firm. I'm sure there's nothing that you're going to tell me that I haven't seen or heard before. If it's about a better understanding of efficiency factor and where that is in your firm, yeah, no problems at all. But just drop me a note and let me know that you'd like to catch up, and we'll be in touch and get that scheduled in over the next few weeks, so that we can start exploring with you how you can improve your profitability and cash flow. So I'm Matt Schlyder from FWA Chartered Accountants. I'm the lawyer's accountant. Thanks again for your participation today. And as Christina mentioned, if you've got any questions that you've put in the Q&A, I'll be coming back to you shortly with some answers.